Good evening students. Today we are going to start a very important chapter for your board examination, that is issue of shares. 14 marks questions will come from that chapter and it is very important part, issue of shares and issue of debenture. First of all, we are going to introduce you. Company is an artificial person created by law, having legal separate entity with perpetual succession and a common seal. These are the characteristics of company. Company is an artificial person created by law, having legal separate entity with perpetual succession. Members may come, members may go, but the company goes on forever till the date of winding up, and a common seal. You use your signature for every transaction, but company show their common seal for their evidence. The law create company and the winding up of company is also by law. These are the characteristics. Now, company's capital is divided into different parts. You have to make a balance sheet with these capital. Number 1, authorized capital or registered capital. Company cannot issue their shares more than this authorized capital. If you want to change this authorized capital, then you have to pass a special resolution. With this, you can do internal or external reconstruction, but in 12th classes, internal reconstruction or external reconstruction is not in your syllabus. Number 2, issued capital. For example, if the shares of company is 10 lakh at the rate of 10, this is your authorized capital. The part of authorized capital which a company wants to issue, this is called issued capital. That is called 70 lakh. This is 1 crore. Double line shows that it will not enter in the balance sheet. Number 3, subscribed capital. When public apply for these shares, this is called subscribed capital. It may be 7 lakh, it may be 6 lakh shares, it may be 8 lakh shares. This is okay. This is under subscription. This is over subscription. In case of over subscription, you have to do pro rata allotment. Number 4, called capital. Company is an artificial person, so company is very clever. Company will not call their money in one lot. For example, company wants to issue that 7 lakh shares at the rate of 8 old up. That is 56 lakh. Now paid up capital. For example, 7 lakh shares at the rate of 8, 56 lakh. But one shareholder to whom 10,000 shares were allotted not paid their 2 rupees, then this is called cause in arrear. 10,000 shares at the rate of 2, 20,000 means 55 lakh 80,000 is your total capital. This is the structure of balance sheet. You have to prepare to do the entries of issue of shares. Number 1, promoters. Promoters are those persons who are the basics starting of the company. For their remuneration, company will pay cash or may issue shares at par, at premium, at discount. So, if company is giving shares to the promoters, then it is called incorporation cost. That is incorporation cost account debit to share capital. Number 2, underwriters. Underwriters are those persons who have done an agreement with the company that they will sell their shares at commission basis. Company will allot shares to the underwriters. Then it is called underwriting commission account debit to underwriter. Underwriting commission account debit to underwriters, and underwriters to share capital. Company can issue their shares at par or at premium. For example, 10 shares at 10, 10 shares at 12 or 15. This is called issue of shares at premium. Now we are going to do calls in arrear and calls in advance. Any person who have not paid their allotment first call or second call on time, their amount is transferred to calls in arrear account, and person who has paid advance their due with allotment or with first call, then it is called calls in advance. If shares are not forfeited, then you have to show calls in arrear journal entries. But if shares are forfeited, then no entry will be shown of calls in arrear. But if in special cases it is given that you have to prepare calls in arrear account, then you have to show that entries. Now we are going to do the entries. I am going to start this question with imaginary figures that a company wants to issue 10,000 shares at the rate of 10, 3 on application, 3 on allotment, 2 on first call, 2 on second call. One shareholder to whom 500 shares were allotted paid their call with allotment, and one shareholder to whom 200 shares were allotted not paid first call, and one shareholder to whom 100 shares were allotted paid second call with first call. So in this question we will do calls in arrear and calls in advance. Number 1, this is your format. First entry, bank account debit. To share application, 10,000 into 3, that is 30,000. capital 30,000. Share allotment account debit 2 share capital 10,000 into 3 30,000. One shareholder to whom 500 shares were allotted paid first and second call with allotment. Bank account debit 2 share allotment 2 calls in advance 30,000 500 into 2 into 2 2,000, that is 32,000. Application and allotment. Now share first call account debit 2 share capital 2 share capital 10,000 into 2 20,000. Bank account debit this amount 1,000 first and 1,000 second advance. Calls in advance account debit one shareholder to whom 200 shares were allotted, note paid first call. Calls in arrear account debit 2 share first call 2 calls in advance. I am going to solve this amount in working notes. You have to get 20,000 rupees. Now we are going to solve this amount with working notes. 20,000 500 into 2 calls in advance, that is 19,000. 200 into 2 400 arrear, that is 18,600. And one shareholder to whom 100 shares were allotted paid second call with first call, that is 200. 18,800. Calls in advance 1,000. Calls in arrear 400. 2 share first call, 2 calls in advance. Share first call account debit 20,000. Bank account debit 20,000 less calls in advance, less calls in arrear, add calls in advance. This is your total amount on first call. Now second call. Share second and final call account debit. Share second and final call account debit. 2 share capital, that is 20,000. That is 20,000. Bank account debit 2 shares second call, 2 bank account debit calls in 50,000 less 1,000 less this 200, this 200, 18,800 advance and total 20,000. This is your second and final call. For example, 4,000 fully paid shares to promoters in corporation post account debit to share capital 4,000 shares into 10 40,000 is your incorporation cost. A bank account debit to share application 10 into 3 30,000. Bank account debit to share allotment 32,000. To share first call 18,800. To share second and final call 18,800. This is your bank account by share by balance sheet. Now you have to prepare a balance sheet. Notes to accounts. First of all, authorized capital, which is not given in the question. Issued, subscribed, called up and paid up. 10,000 shares at the rate of 10, 1 lakh less calls in area, that is 899,200 plus incorporation cost capital, that is 40,000, 1,39,200 is your share capital. The balance of current assets, cash and cash equivalent 99,200 and incorporation cost as unamortization expenses, that is 40,000. If assets and liabilities matched, then your question is correct. Otherwise, your question is incorrect. Thank you so much.